Mic check, 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 check. Volume is good. Checkity check. All right, volume looks good. And we are good to go live. We are set. All right, let's begin. Hey, good Sunday to everyone who is here or who's watching this in the early mornings of the day. Tomorrow, we've got a holiday, bank holiday, so there's going to be a half-day trading for futures. Typically, we don't have a lot of stuff in the making for these types of days, which is totally fine, but you need to be prepared for what could potentially happen. And we're actually going to talk through. I'll make another video on this specifically, but typically on days like this, you don't want to be trading. You don't want to be trading because there are certain days and times when you know not to trade. So we'll be talking about that today. We're going to be talking about mentality today, and we're going to take a look and see what we've got for the week. So let's head over to the charts. So, this week we've got a bank holiday on Monday, so all of Monday's trading will count as Tuesday's trading. Typically, the bank holidays and the day that follows, bank holidays are half days for futures. You can kind of already see that futures have risen, but this particular week we have FOMC minutes. This can cause some strange volatility. You have another unemployment claims update and flash PMI on Thursday. So Thursday is going to be a really interesting day, in my opinion. It's a shorter week, so whatever is going to happen this week will probably set up in the following week. So this is really it for this week. There's nothing but a couple of FOMC speakers after hours, nothing on Friday. And if I check our market watch as well for February 18th this week. Where's February 18th? 19th, 20th. Really, it was what I need. Here we go. So some Fed president discussions throughout the day on Wednesday. You've got Fed speakers all throughout the day on Thursday. This week isn't going to be a fun week to trade. I'm not going to lie. It's not going to be great trading on Tuesday. Wednesday is the day before unemployment claims. So if you're not done trading in the morning, I don't know if it's going to move very much. So those are things that we want to keep an eye on. But Wednesday, at least FOMC minutes can cause some volatility. It is not exactly the same as FOMC rate announcement itself, but it can cause some volatility. So keep that in mind. All right, so that's really it on our end here. And I want to check something real quick here. So commitment of traders got updated. They're slightly less short, but nothing has changed drastically yet from an open interest perspective. So I believe commercials are still net short by quite a bit. So we're still looking for shorts. We just don't know when it's going to happen. And let's take a look over at our charts. We obviously on Friday we got a market reversal. So Monday, high of week. Tuesday came down, low of week. Wednesday, Thursday, kind of like continued to stair step up. Friday got into an hourly fair value gap. Premium south side imbalance traded down and has now gone back into that consolidation range. So let's take a look at the daily chart over here. So our daily chart, we can see that we've developed an area of consolidation here. So I'm gonna be I've mentioned this for weeks. We expected once we broke out on top of that, we expected an area of consolidation, and that's exactly where we're at. We don't have enough data for us to confirm that we will head lower. So far, we've headed higher for the day and then started to creep downwards, right? So we're looking for this week to continue consolidation, and let's take a look at the higher time frame just to be perfectly clear about what we think could happen. So this weekly candle took out the lows and highs of last week. So is it more prone to take out this short-term low this week? Well, I would prefer it didn't do that. I prefer that it maintained above here somewhere so that we can see another short-term high created and another short-term low created here. That will allow us to see and wait for displacement lower on a weekly chart. If we see displacement lower after this week, if we don't break this short-term low, then I would look for displacement below here and below here to eventually begin a seasonally bearish half of the month on February. Now, in general, February is a more how do you say it? Typically more bullish month in general. So, and I think that there's very good data showing that in the past few times. But the thing is the middle of February to the end of February in the past few years has shown to be a little bit more bearish. Over the course of time, it kind of consolidated during this latter part of February, hit a low in the early part of March, and then has started to stair step up as we get into April. We have a bullish April month in general. There have been some times in the past where the beginning of April is slightly bearish, but the end of April, typically we see the mid part of April to the end of April be fairly bullish. So we're going to keep an eye out for that. We're going to see if February maintains a bullish run, if we continue to see price head upwards. There's a lot of people that went short from this previous week, right? So the question is are we going to expand higher? Are we going to expand lower? I think we'll still consolidate in this range that has been created here. You can see that on the daily. There isn't a very firm draw on liquidity right this moment, right? We know that there's an all-time high here. We know that there's a short-term low here that took out stops and headed back up higher. So we're resting above these long-term highs from way over here. We're resting above them right now. So if we start to see displacement below this, that's going to be key because we now have a liquidity pool beneath here. We do have a volume imbalance down here and a daily bullish order block down here too. Not to say that this whole thing couldn't be a consolidation range, as it, yes, it definitely could. I'm considering this low to this high to be our current dealing range. So whatever happens within that range, and in fact, this high to this low is our new dealing range. We need price to tell us definitively. Hey, what's up, Kirk? Good to see you, brother. How you doing, man? Sorry, I missed you. Hopefully I didn't miss you for too long. Hope you're doing well, buddy. How's your weekend? Hope it was good. Cool. So again, consolidation for the daily chart is what we're looking at. Let's take a look at the 4-hour chart. Yeah, I mean, this is consolidation. We expected once we broke above that long-term high, once we started to see price break above here, we finished the market maker buy model, right? Kirk, good now. Good. Yeah, so we're going to be in this range of consolidation until price gives us a little wink or a nudge as to where exactly it's going to go. As of right now, I think that we are still meant to head back up, at least within this consolidation range. I think maybe another couple of hits around this area is going to be key, as we do see relative equal highs up here as buy side liquidity, all-time high up here. Short-term low got taken out, but just as a quick stop run here. So that's what I think we're going to do. I think we'll trade higher, but we'll consolidate. Let's take a closer look over at ES and the Dow, right? So comparably, here's ES's chart on the weekly. So you can kind of see how we are also right around that area, just below short-term high or all-time high. We made an all-time high last week and kind of wicked down, but traded all the way back up. So currently, ES as well on the daily chart here. ES itself is also ping-ponging around that all-time high area. ES has also started up and then is slowly creeping down. I haven't put in ES's new week opening gap in yet, but you can do that yourself as well. We see that on ES. We had a similar movement where we traded above this balanced price range, came back down, peaked down into here, took out that sell side liquidity briefly, right? And then did a stop hunt, and now came back up into this range. So ES looks like it's going to head down, maybe pick up some more orders down here, and then do its consolidation range around that all-time long-term high from a long time ago. So I think that ES definitely looks like it's going to be within that area of consolidation too. Let's take a look over at the Dow. So Dow is interesting, right? Dow has reached above its all-time high and stayed there like very strongly, right? So you can kind of see how we traded down to this bullish order block on the weekly chart and instantly repelled up. So I find that to be very, very interesting. A lot of people who are trying to go short here got squeezed out on that run. So, and we took out some other previous week stops there. If we take a look at the daily chart, we see that we've hung out above that all-time high and we've bounced off of it and stayed in this range here. So all three of us, hey, Dipchi Bao, good to see you, brother. How you doing? How's your weekend? Hope you had a fantastic weekend. We're just doing some prep for the week. It does look like all three indices are reaching an area of consolidation. When there is an area of consolidation, this is where we need to be very careful. I am considering not trading this week, primarily because I don't know what's going to happen. If I see a great setup, I will scalp. I think in this next couple of weeks, scalping protocols would be reasonable, in my opinion. So going for 10-20 handles instead of the 30-50 90 handles is probably going to be reasonable. And primarily because we have unemployment claims this week, we've got unemployment claims next week, another consumer sentiment next week, new home sales. So lots more in the following week at the end of February. So I like the volatility next week better than this week, because this week you'll have an abridged period of time with Monday being a half day for futures trading. Dip Chi Bao, I'm excited for the next week. How you doing? I'm doing really good. Doing really good. Got in a nap earlier today, so that was really nice. And I think coming here and talking a little bit earlier is kind of nice too, because I think 9 o'clock is probably a little late for many, especially leading into the 9 to 5 job week next week. So I figure I'll go from 8:30 till about 9 o'clock and then call it a night, go drink some water, get ready. Just got my water bottle here, or cup. From a account perspective, Dip Chi Bao actually inspired me to look at 150Ks with one of the, I blew a 50K account doing stupid things. I think I was over trading because I had been green. So I full disclosure, I blew one of the 50K accounts, but I ended up passing a 150K account on that same day. So was partially kind of because I was pissed that I was looking long when I clearly should have been looking short on a day that was a reversal day, Friday, end of week, higher probability that we see a market reversal, right? So, but the good thing is with that 150K now, that means I've got 3 50K accounts and 3. Is that right? 350K accounts and 350K accounts, yeah. So roughly, and we're gonna keep trading on those in the coming week, but I just don't know about Monday. Like, I don't know if I'm gonna trade tomorrow. It's a half day. If you've ever traded on half days, it's pretty abysmal. But it's not to say that you can't find trades, but it is pretty abysmal. So just be careful tomorrow. You can clearly see there's no clear draw on liquidity here. Now, that being said, let's look deeper into this area, right? So we have a range. This range from this low down here to this high. This is a new range that we've established, right? So let's look into this range here a little bit closer. And we'll go down into lower time frames and see if there's anything that we can find. If we know that we're in consolidation, we know that price typically goes from internal range liquidity to external range liquidity. So external range liquidity here, and then it came back down, external range here, back to internal range, which is this sell side imbalance. So now we took out external range liquidity from this little swing, and this one didn't quite make it all the way down. So I think it might head down here. It could take this out here potentially. We don't know, but that is a potential sell side liquidity. And now we have this as a potential buy side liquidity as well, right? So we're going to just keep these marked so that we can take a look, right? Let me do one thing and clean this chart up a bit from Friday's annotations. We can look into them as well if you want, but I'm just cleaning some of these up because there's no need for them anymore. Might be a little bit easier to see as well. Okay, great. So on the hourly chart, we still see that we're in this consolidation. There's no question about that, right? So let's take a look at the peaks and troughs here. So I'm going to remove this as well, remove this as well. We'll go down into a 15-minute chart now. Remember, we were taking some longs in this area, but this displacement on a Friday should have given us a clue that, hey, we were moved really quickly away from this. There's a high likelihood we're going to head lower to aim for and fill out this sell side market maker sell model here. We went down, took this out, came back up, about optimal trade entry, right? From high to this low. We came back up to 50%, fair value gap here. What else is there? Look closer. We have bearish order block here. Kind of see how it just barely went up into that bearish order block, right? Institutional order flow entry drill. Low, high, low, higher, high. Movement head lower. And that was the end of the day. So I traded this market maker sell model down here. I traded this long, saw that we were headed lower, missed all of this because of meetings, and then you could have taken a long back up to this area here, and we were expecting it to head lower. So within the 15-minute sequence here, though, so you can kind of see how we have market structure here, and we didn't make it below this. So we're in the middle of this dealing range right now, and we traded up to optimal trade entry. and headed lower. So we're in this dangerous area of consolidation here where we don't know, hey, will it just drop out and target this area of liquidity, ultimately aiming for this sell side liquidity pool down here? Because these are still relative equal lows. If you even though they look kind of far away from each other, they're still relative equal lows in the grand scheme of things. This does seem like a failure swing to me. This level of movement does feel like a failure swing, and you can kind of see how like these sell-offs, you know, they're becoming far more and more pronounced. So I think that if on one of these days, if we see an economic event take us lower, I think that we could certainly see us have a market structure shift, but we need to see it on the weekly chart for me to really feel like, yep, this is time. This type of consolidation typically is what I would expect before the next move, whether it's higher or lower, doesn't matter, but we expect this level of consolidation after taking out a huge all-time high. So that is what I'll expect this week. We will expect internal range liquidities to be taken. So what does that mean? So we have this 15-minute chart here, right? What I want to do here is we're going to do a quick little look into, let's see, I still have 9 minutes. So we're going to look into some of these here so that you can get a better grasp on some of the things that are happening over here. Now, what's weird is the data is wrong. This starts at the 06 thing. I don't know. Something's up with the Rhythmic's data. I'll probably have to clear my data, and reset the database rather, after I'm done with this to see if I can fit. But new week opening gap is these two black lines. You'll have to look on TradingView to do that. But let's go. Hey, what's up, Forex Ragnar? Monday's kind of dip bound. Monday's kind of risky if there's no news. Yeah, it's a banking holiday. There can be plays to be made. Typically, if you're not up early in the morning, the plays typically run already. There are some trades, but since you have to be done trading by 1 o'clock's treated as, you know, essentially the close of the day. So, and if you have trades on after Apex closes at 1, you are liable for that. So if it gaps down or up on Tuesday, then you're gonna be in for some failed accounts, right? So be careful with that. If you do trade tomorrow, Monday, it doesn't count as a Monday trade. You'll have to wait until the end of Tuesday for things to count. So any trades on Monday, Sunday, Monday, all count as Tuesday trading. So we'll take a look into this area here. And one thing I'll also do is highlight this one here, because this is a really nice one to study on a lower time frame chart. So here we are on a 1 minute chart down here, right? So if you recall, we see before this dropped down, right? We knew this was an area of consolidation. We knew that this had started to head higher. We saw this take out sell side, but reach down into a fair value gap here, right there. Or I guess a bullish order block, really. Close to it, at least. Displacement higher. Return lower. Sell side taken. Run lunchtime. Well, I guess this is afternoon run here. So where is that? Lead up into the 2 o'clock time frame. So in the morning, we had those massive drops, right? So in 2 o'clock, we were looking to see if we started to see evidence of displacement lower than short-term lows. We start to see some movement down here, but it doesn't quite displace, right? That's our first displacement there. Price trades back up, fair value gap. You could have entered here at 17,883. Within that minute, you would have been ahead by 10 handles, and you would have had absolutely no question movement lower right there, 17,802. So you would have had 80 handles within the span of gosh, this would have been 35 to 48. So 13 minutes, one 15-minute candle essentially. So these are the type of things that you want to keep your eye out for. You see the previous session, how that dropped on a Friday at that. Even if I was bullish, I should have known that market reversal was more likely. So that was on a 1 minute chart that you see that fair value gap form. And you had multiple times to get into it. You could have gotten into it on this run below this short-term low. This run below that short-term low gave you an entry as well, pyramid. And then this one below that short-term low gave you another entry. So this is one of the examples that you can study and go back into to look at pyramiding examples, right? So it does end up finishing off the rest of that towards the end of the day. It does aim for that short-term low down there to finish off the market maker sell model, right? So area of original consolidation, accumulation, second stage accumulation, peak, first stage distribution, second stage distribution. So let's go cook the market this week. I don't know if this week's going to be the right week to cook it. This is going to be it's a week that I don't understand nearly as well, right? But we're going through and studying this portion, that latter portion, expecting a market maker sell model because of the morning session's heavy movement, right? Heavy displacement that we haven't seen for quite some time. Now, let's go down to a 15-second chart and look at that once more, right? So we know that we had, when this happened, we saw it break out of there. We saw it make another high there. And we didn't see displacement really until that movement there, right there. So 1792, right? And even then, that wasn't really enough. Like, we did see a drop below there. No fair value gap, right? Nothing there. No fair value gap yet. Nothing yet. We see a drop below a short-term low here, but no fair value gap yet, right? This is the first fair value gap that we see below a short-term low. And what does that drop below? Drops below this mitigation block area too. So at this time, we don't know yet. This could still bounce back up, right? So here we might think, oh, okay, well, this is a mitigation block. Let me hold off and not enter here because this could go back up and keep on taking highs out, right? But then we see that displacement candle, right? Once we see that happen, then we have a little better shot of thinking, okay, well, this could get me there. Again, it trades up to that mitigation block and heads higher. So we might have gotten stopped out there if we were using 2022 scalping models, right? So here we see it trade now. Now we see it trade well below this one here. And we're close to that 1 minute time frame as well. So you can kind of see how, like, 15-second chart, it's not really beneficial. I mean, look at this. This actually would have been harder to get into. And you would have gotten stopped out there too. But now you see some movements here. We see movement there. That feels like displacement to me, right? And you have your entry here. So that would have actually gotten you in below the 1 minute chart. So lower time frames aren't always helpful, right? Now you could have gotten in there, but then you see the drop happen. So lower time frames aren't necessarily always helpful. 1 minute time frame is oftentimes what you need. That is it from a market prep perspective this week. We expect consolidation, maybe rise higher, and then kind of like maybe head lower too. I want this short-term low on the weekly chart to remain. So I don't want it to trade below that level there, if at all possible. I want to see it consolidate above this high. It's probably going to take it. I don't want it to, but it's probably going to take it. But let's see, right? If we start to see reversal tendencies, we will see that relatively quickly. There's a short-term low here. If we trade and displace below that, that's the one that I think will be key until this forms. If we drop out completely and go below this short-term low without immediately coming back up, then I will consider that to be a true shift and change in state of delivery. Okay, so keep your weekly charts in mind this week. It's going to be really important. Uh, so on this stream, I wanted to also talk about a couple of things. So I want to talk about the mentality for recovering from blown accounts here, because I know there's a few other people that probably could benefit from this, because I have blown so many accounts, and in the beginning I recognized how silly it was, right? So let's talk about blown accounts. And we don't really need the charts for this. This will be just a face-to-face. So from a blown accounts perspective, you know, at some point you're going to realize that, hey, maybe trading 20 accounts at one time maybe I'm not ready for that. Yes, you can make a lot of money really quickly, but if you're not ready with your model, you're not ready to with what you're looking for, with what kind of signatures you're waiting for, and your play isn't there, then you're not going to have success trading multiple accounts. In fact, you're probably going to blow them all. What's going to save you a lot of money in the long term is trading one at a time, despite whatever FOMO you have. Like, if you're able to copy trade and like pass a whole bunch in one day, great. You know, pay the lifetime fee and trade one at a time, right? That's what I'm going to be doing. It's just so that I don't blow all these accounts at once. It's a lot of hard-earned money, and you want to make sure that you're respecting the risk, right? When you start to trade, it's inevitable, man's hubris, what women's equivalent, that you might end up thinking like, oh man, I'm on a roll. I'm probably gonna continue to be right. I better push my luck, right? That's what I think sometimes, and I've been needing to really, really dial that back. A week of good trading isn't going to mean that the next week is going to be just as good. So how do you hedge that? So you can pass multiple accounts. You've seen me do it multiple times now. You know it's doable. You know it's feasible. Apex Trader Funding helps it make it easy. Their rules are there for a reason, but they help you get to the performance side very quickly, and it's up to you to keep those accounts. So one at a time allows you to really hedge the movements and make sure that you are not blowing all of them at one time. Slow and steady does win the race in this. Slowly capturing a few hundred here, maybe a few dozens of dollars here and there. It might not seem like a lot, but over the course of a year, it will add up. So if you've blown accounts like I have recently, it's important to, I can't remember who it was. I think it was Anna who had mentioned that they blew a couple accounts that were evaluation accounts that were so close to being performance accounts. So in that side, when that happens, you just kind of sit back, record the trades, take pictures, snapshot everything that you can, and go from there. I mean, there's nothing more about to study what you did wrong. As long as the closer you accept that, the sooner you accept that, the sooner you can get to analyzing where your model was incorrect or where you didn't follow your model correctly. So, yeah, I mean, be careful today and tomorrow trading. As you can see, we did have like 30 handles worth of movement on NASDAQ so far. I think that London will be the time to trade if you're going to trade. But once you get into New York Open, just be careful, because there's not a lot of time in the day for things to happen. If you don't get a movement by New York futures, New York New York Open kill zone, then just be okay with looking for something on Tuesday, because there's so much more on Tuesday happening than Monday. So be careful trading tomorrow. It's a half day. Can we use NinjaTrader to backtest like TradingView? I actually don't know, like market replay. Oh. No, that's a good question. I think you can save data. I have never done that, but I think you can turn on like recording of data. I just don't know. I haven't done that. So um, all of my back testing is after the fact, and I'm looking through charts, just hunting through charts left and right. Um, but yeah, I haven't done back testing on NinjaTrader, so unfortunately, I don't know DipChUao. But I'm pretty certain they have the ability to record tick to tick, tick by tick price action. But you have to like go into the help, the NinjaTrader help, to go figure out how to turn that on. So I'd say, if it's valuable to you, go check that out. I just don't do it. I am doing static back testing for the most part. Yeah, I'm not sure either, unfortunately. Uh, so not sure, but if you find out, more power to you, that'll allow you to do that. Um, but yeah, uh, so yeah, I think watch for consolidation this week. We don't have a clear direction as to where we're at yet, so we're gonna wait and go with scalping protocols and until we find something that's reasonable for this week. We'll look to Wednesday and Thursday to be our core trading days. Obviously, I won't be here on Thursday, and I won't be here on Tuesday too. I've realized that it's just too hard to stream on Tuesdays and Thursdays. Monday, technically I could stream, but there's just nothing. There's no direction yet, so there's no high probability trade. You're more prone to blow your accounts on a Monday than you are any other day. So I don't think, as I mentioned last week, I'm probably not going to trade on Monday, Tuesday, and Thursday because Monday because I don't know the direction for the weekly bias yet, and then Tuesdays and Thursdays because I have to physically go into work. What I will do is I'm going to be thinking about what kind of videos would be most beneficial. So if you start to think about things that are beneficial, I'll put a post out there and just comment on that post of things that would be more beneficial for me to review and take a look at. And I'll start to create videos for those that can be released on those days that I'm off and not streaming. I think that would probably be the best route there because one, that's going to be more valuable for you. Two, Monday's a horrible day because I don't know where the price is going to go yet, so streaming on a Monday is invaluable. Three, Tuesdays and Thursdays I work, so I can't really focus on any sort of trades whatsoever. So Wednesdays and Fridays I should be able to stream if I'm at home, of course in the morning, and I'll be able to create higher quality videos for you, targeted to what you actually want to hear about. So think about that. Think about things that you've been wondering about, things that you want me to go through or review. I'm gonna just after I close off tonight, I will not be streaming tomorrow, Tuesday and Thursday, but Wednesday and Friday. So yeah, I think that's it though for today. So a little bit over, but lots of good information still. With the expectation that we consolidate, look for things that take you down into this is so off. Like let me pull up trading view because you can actually see the whole tick by tick here. Where is it? Trading view. Here it is. So dollar went into that inversion fair value gap and is trading just beneath it. If dollar decides it wants to just go ham and have another green week, then so be it. But if dollar does end up going for these double highs, this relative equal highs here, then indices are in for quite a bit of a run. So I don't know what's gonna happen there, but let's look at NASDAQ here. 1 minute time frame. So this is what's happened so far on NASDAQ. What can be seen? So we see a massive spike up, right? We see our new week opening gap here. We see that we traded above it. We gapped up above it. We came back down into this fair value gap, right? That's a little too thick here. Why is this? Hold on. Let's try that again. Oh, why is that being an array? That's weird. Okay, I don't know why that's being an array. That shouldn't be doing that, but that's weird. Okay. Must be something new. I probably extend. Oh, here it is. That's what I wanted. Okay. I'm trying to figure out what the heck was going on there. So sell side liquidity right here. And then you have buy side liquidity up here. So even in a small time frame like this, where you see a swing low, swing high on a 1 minute time frame, you could even take this little bit here. The heck? Hold on. There you go. So you could have taken even this little bit here as a quick little trade from 67 to 77 to 87, right? And of course, once it takes out buy side liquidity, what do we have? We have a run above, movement below, fair value gap, return up into fair value gap, displacement lower, second stage delivery, terminus. So a market maker buy model followed closely by a market maker sell model. So this is what you'll typically see in consolidation. You'll see, and what does that make, right? Oh, I'm not showing the chart. Sorry about that. So here we go. There we go. Okay. So this is the last thing I'll leave you with. During weeks like this, this is on a 1 minute chart, right? So trading view on a 1 minute chart, you can kind of see how there's the new week opening gap here. We traded up higher, and this is all you saw back, a few seconds during the open. So you see this here. Short-term high got taken out there. You want to see price head below this short-term low. Pick up some more orders around this area. Now, we know with hindsight, with the benefit of hindsight, we know that we came down, picked it up, came down again, picked up some more orders, and then started to see. Let's zoom in a little bit closer here. This would have been difficult to try to trade because we see a movement lower. This could have been our first trade where we were trying to go long, right? We don't see very much on the 1 minute time frame here. We don't see a short-term high broken, so we wait. We see sell side get taken out here too. So now we have a sell side liquidity, and we see a short-term high here. Displacement higher, right? Now this is your entry, 17,771.75. Boom, you get it hit. You get 1771.69. That's about 2 handles of drawdown, maybe 3 handles of drawdown, right? So you're sitting there red as you entered at 1771. You're red until you get that movement higher. And now you know it's probably going to go for this short-term high first, which it does. Lands it right there. So you take off profit there. It's at 83. Remember, you entered at 71, so that's 10 handles. That's scalping protocol. And then you held some for it to take off the rest of that at 93. So 83.70, that's 20 handles, still a decent amount of work. So what are you thinking now that it's taken here? You're now looking for shorts, right? In consolidation type environments, right? Specifically the environments that we are in right now. So you can kind of see rejected. People took profit here, came back down, ended up breaking above a bit, right? Broke above that short-term high, created relative equal highs. So we assume that it's going to break through those as well. And it does right there, right? Boom. Heads higher. Right around here. So here's where you see that movement lower, right there, right? So if I reset the chart view, you could say, hey, show me. So this is a previous relative equal high, right? We looked at that just now. Yeah, get used to TradingView versus NinjaTrader. And this is all on a 1 minute chart too, by the way. So you can do this on a 1 minute chart. So once we see relative equal highs, stops rated, right? Breakout traders are trying to go in on a premium here. We're not breakout traders, okay? We look to see, we see a higher low formed, bullish order block here, fine. Highs were not respected here. Lower high got formed here. Higher low, higher high, higher low, lower high. And then if you didn't get this institutional order flow entry drill, which is a short-term low here formed, displacement, right? That would have been kind of sketchy to take, in my opinion. I wouldn't have taken that, but I do see that one there, right? And I see us open, come up here. Volume imbalance could be the first gap that you take. If you took that here, that's around 93, 94. You have to have your stop above this high, this short-term high here. That's could be a little bit too much. That's about 7 handles that you'd have to endure a potential drawdown. But you can kind of see a fair value gap forms here, fair value gap forms here. We get a movement back up into this fair value gap, and that's it, right? That is your sell side shift and structure on a 1 minute time frame. What are you aiming for here? Well, you have this low, you have this pronounced relative equal lows, and of course terminus. So your entry here is probably going to be on this fair value gap, where you have to have your stop loss again above this short-term high here. So from an entry of 90, you have to be willing to withstand an 8 handle stop loss. So what happens now? We see us immediately head lower. First stage distribution of a market maker sell model on a 1 minute time frame at that, right? This is all on 1 minute. So what happens here? We head lower, come back, institutional order flow entry drill. You can enter pyramid one more to exit at this relative equal low. The majority of your position needs to be off here. And we get that, a few more handles and then some. And then the rest of your position should be off right now. So that takes it out, consolidates a bit, and heads back up, right? So you can find these types of plays here all the time. And in fact, this is where when you go down into a 15-second or 30-second chart, you can now see these a little bit easier. So you can kind of see how that same structure formed here. So boom, displacement, trades back up here. You can buy, you can sell here. Another distribution, another distribution. So this is like first stage of distribution, second stage distribution, terminus. Market maker sell model right there on lower time frame chart. Let's look at a 5-second chart. Let's look at a 5-second chart on that same area, okay? It's going to be light, but this will help you There we go. So let's take a look at that segment here. Okay, so this is the entire segment, right? So even on a 5-second chart, you can see we displaced above relative equal highs here, consolidation, one final run up, and then you see a market structure shift. Let's take a closer look at that. So on a 5-second chart, change in state of delivery right there. But you might not believe that yet. So short-term low forms. There's a few gaps up here. Lots of volume imbalances on a 5-second chart. Trades down. Heads over here. So you could have gotten in around here, but you'd have to suffer, again, a decent number, about 5 handles worth of drawdown. But once you get there, you would have gotten in far earlier than had you waited for the 1-minute chart. Because here, even if you had waited for this here, you could clearly see this is a nice movement lower. Return back to a bearish order block. Sell that at 93. Right? And now you're in at first distribution, second stage distribution, terminus. Compare that back to the 1-minute time frame. So the 1-minute time frame here, this would have been your first displacement candle. You don't get a movement back up into this fair value gap. So you have to wait for this next candle down here at 90. Still within that first stage of distribution. So again, like, just proves to you, you don't have to go down to those lower time frame charts. In fact, they're much more difficult, but to read. So study that. Expect this week to be a little bit more of a continuation of this consolidation on the daily chart, and expect this to continue. But what does that mean? That means you've got market maker sell models, you've got market maker buy models, you've got market maker sell models. So this type of movement is what, if you can expect that, you now know that you can use scalping protocols and look for areas of liquidity that would finish and create those kind of models, because you know that it's going to go for both edges, right? So that will be what we look for this week. And unfortunately, that's my time for today. So thank you all for hopping on today. Hope this was helpful, and good luck trading tomorrow if you're going to trade tomorrow. We'll be back streaming on Wednesday. I may or may not choose to stream early in the morning. If I do, it'll be early as always. But yeah, gotta get ready for work as well. So thanks a lot, everyone. Hope this was helpful, and I'm gonna go drink some water and see what the wife's up to. So have a great night. We'll catch up soon. Take care.